the market is very quiet, really. Not too much happening. The Nifty is down just about 25 odd points. Shriram Finance is the company on our radar. Their business momentum has been picking up. Let's find out more about what the rising interest rates could do to their business. Umesh Revankar, the Executive Vice Chairman of Shriram Finance, joins in. The data was quite good in the quarter gone by. Disbursals have gone up by almost 13.5% quarter on quarter. The AUM growth is about 13% year on year and 5% quarter on quarter. Mr. Revankar, good morning. Always great speaking with you. How is the mood on the ground now, and what kind of growth rates do you see in terms of disbursals and AUM for the full year of FY24?
Yeah, the market, the credit demand seems to be quite good because it is very consistent across urban and rural area. We have not seen any kind of weakness or slowdown in any of the market. The demand for the small credit is quite strong across the commercial vehicle and SME business. So I think 24 is going to be equally good because since there is no adversary impact, so I feel as long as the real estate market also keeps doing well, I think the demand in urban area will continue to maintain at this level. Rural seems to be very strong. I'm really confident that rural will remain very strong as far as credit demand is concerned for the next full year.
Can you give us the growth rates? What would the year-end target be in terms of both disbursals and AUM?
We normally look at overall AUM growth, and 15% is the guidance we have given in the last year for 3 years, and we are very confident of maintaining that target.
Okay, all right. Good morning, Mr. Revankar. Good to hear that both urban as well as rural India is firing, as per your background check. So that's pretty good. But let's focus on the cost of funds. It's been moving up for the industry on the whole because of, rate increase that have come from the RBI. But what was encouraging in the past quarter for you all, your cost of funds, I think, went up by only 7 basis points. And you have been guiding that in quarter 4 it will not go up by that much. So could you confirm that? The cost of funds, what is it coming at, the incremental cost of funds, and what that means in terms of a NIMS guidance? Go ahead, sir.
Yeah, the overall cost of funds, because we have very diversified liability portfolio, we are able to maintain or have a good control on the cost of funds. And I don't think it will go beyond 5 to 10 basis points for this quarter. And the net interest margins last year, quarter, the results were 8.52. We should be around that, maybe 5 to 10 basis point correction could be there in net interest margin because of the increase in, but we have the ability, we are in the niche segment, we have the ability to pass it on to the customer, but we don't intend to do it immediately. However, I feel looking at the credit demand and the overall market response, we should be able to pass it on if at all it goes further up. So as of now, we are very confident that net interest margins will be around the level of the third quarter numbers.
Okay. Can you give us some more clarity around the accounting impact of the merger? I do understand that post the merger, the book value has gone up by about 2,800 crores. But I want to know whether there could be any impairment for the next 2 to 3 years because of this.
No, it is only the merger and the fair value comparison of both the accounts, both the companies. That's the impact of that, and there may not be further impact going forward in the next couple of years or coming years. So the merger is totally complete, and everything is done and dusted. So there may not be any major impact or even a temporary impact is what we feel.
Motilal Oswal, which tracks your company, their analyst says that in FY24, there could be a margin compression of about 15 basis points over 23. Would that sound reasonable?
As we grow into newer segment, or maybe as we go into larger ticket size, there could be a small margin compression, that should not bother us, because ultimately what is important is how we manage our overall portfolio quality and the credit cost. That determines the bottom line. So I think 10-15 basis point correction should not have any impact.
Okay. They also point out, and I don't know if you'd like to respond to that. I'm sure you're in touch with your shareholders, institutional shareholders, etc. They point to the fact that there are concerns in the market, not concerns, but I mean anticipation that maybe there will be sort of a potential exit by investors like Apex, TPG, etc. It's a more stock market related question. Of course, you run the business, but if you've spoken with shareholders, what their thinking is in this, Mr. Revankar, could you tell our viewers? What are you picking up?
See, all the time we have been in the market. We are talking to the current shareholders and also the potential new investors. And there is considerable interest in our stock. And with now multi-product company and with a strong growth plan, there are a lot of large investors equally interested in participating. So I don't really see that as any kind of a significant event.
All right, Mr. Revankar, the street believes that could be a bit of a supply overhang, but you're saying there's enough appetite for your stock. We take that on board. Let's talk about the MSME segment. That's around 10% of your AUM, right? And most brokerages, they believe that you're planning to leverage the Shriram's branches to roll out SME businesses to new states. So how large can this segment become? Currently, it's 10% of AUM. Where do you see that number headed, and what's the game plan out here?
The MSME is a very, very broad definition. The large number of manufacturing services and trading activity within this. What we are planning to do is we are wanting to get into a smaller ticket that is anywhere between 10 to 15 lakh ticket size, and they want to get into the SME lending in the northern and central states where we had not rolled out it in the past. The Shriram Union, which was in the earlier avatar, used to lend SME mostly in the southern belt and in the western belt. So we want to now roll out. We are identifying the industries, we are understanding the business, which we feel very comfortable in lending. And because first of all, we need to understand the business, experience it, then only scale it up. So everywhere, we would like to experience and look into the ability of the local team to handle the business, understand the business, then we'll roll out in a big way. So scope is very, very huge. We feel that as far as SME business is concerned, the total potential market size or demand credit gap is around 10 lakh crores. So that is the kind of potential is there. So we should be make a small mark in certain pockets.
Okay. And in the two-wheeler lending, right? I mean, that space has picked up in a big way. It's interesting because this is the same space that was under a big slowdown in the last many years. But for your own business, two-wheeler lending has gone up about 14% year on year, almost 18% quarter on quarter. Do you think this is a trend that is sustainable?
The third quarter, you always have a big growth because of the festive demand. So that may not remain throughout the year. But yes, the two-wheeler industry is really, sales are going up. And we are also having a bigger network now. With a bigger network, better reach, we should be able to really make it grow fast. And I strongly believe the two-wheeler demand, which is mostly coming from the northern belt, because if you see that the agrarian economy has a bigger demand for the two-wheeler than the southern market, where some kind of a maturity is reached as far as the two-wheeler is concerned. So there will be a much bigger demand, and the bigger network what we have now in the northern and central and eastern is going to help us to grow much faster.
Mr. Revankar, final question then, if you could give us a couple of numbers. What's the credit cost guidance? I think it was around 2% for the past quarter. You could tell us what's the outlook on that front, point number one. Point number two is, a couple of brokerages are working with ROEs in the mid-teens. Gettable?
Yes. See, as far as the credit cost is concerned, We are at around 1.94 for the 9 months. We should be able to maintain that 2% level throughout is what we believe. And plus and minus 10 to 15 basis point could be the for next couple of quarters. I don't see any other further increase there. And as far as the ROE is concerned, we are already at 17. We should be anywhere between 16 to 18 at all the points, because now since we have addressed the integration and the operating cost issues, all these things being addressed, I don't really see any surprises there. And if you are able to grow faster, then the ROE can even cross 18%.
Okay, all right. You're sounding quite upbeat, Mr. Revankar. Good to have you midway through the quarter and giving us a quick update out there. Wishing you the best for quarter four. We look forward to chatting up with you rather soon. Well, let's